Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today is Monday the 13th of November 2017 and the chart I'm looking at this morning is a 30-minute Swissy, and I just want to draw your attention to this area of support, and in particular the fact that it's a really nice clean level. It's been hit several times but it's never violated the level, and when you're looking for market manipulations, that's what you want. You don't want to see a level that's sort of scruffy and been violated several times. Makes it difficult to read, and also less likely that you're going to be able to uncover a stop hunt. A stop hunt's best when the level is clean, because it's a perfect starting point and you can understand whether or not there's been a manipulation with ease, as in this case. And the idea obviously is every time price comes down to the level, you've got traders who are buying off the level. They'll place stops above and below these levels, and if you get a little bounce just ahead of the level, again people will place stops there. And it's very simple to recognize the fact that there's a lot of money liquidity sat there in the way of stops. So if you're something big and you want to do some buy low sell high, right, they're no different, big market participants. The problem is that they have is they're trading in massive size, so they need a way of transacting more efficiently, because if they start buying at that perfect level along with everybody else, and when I say that is because if you're looking at price action and a really nice level, what happens is it becomes very obvious for people to see. So everyone's trying to buy low sell high, right? But if everyone and you include the institutions in that, what happens is if they start buying where everyone else is buying, price is going to shoot away from the prices. Let's say it's 100, 120, 140 before they get all their business done. Imagine they've got an order, whatever, 10 billion to buy $10 billion, and they attempt to buy where everyone else is buying at that perfectly defined level of support that there's loads of eyeballs on, then that's a problem, because they might try and attempt to get that 10 billion on, but before they get it all on, they only get 2 billion on before price is now at 120, and then they attempt to get the rest of the order on, and then they've only got 4 billion done and now we're at 140. That can't happen. It becomes too expensive for them. That's slippage, and that's why manipulations exist. So what the bank needs to do is it needs to transact where everyone else is selling, or being forced to sell, so that they can get that buy-in done all in one go, nice and efficiently, and then price is off to the races, and they did their bidding in and around the price where they wanted to purchase the currency. So it all stems from the nature of the level itself. How pure is that level? And the more pure that level, the easier it is for them to manipulate, but also thankfully for us, it's easy for us to see where the manipulation is occurring. And if we can figure out if a stop hunt's occurred, which we can from there, it becomes a lot easier, right? Then we can do our buying along with the big banks. So this is the situation in here. Now it's also, I've highlighted this yellow area at the top. It's also important to take a holistic view of the overall price action as well, and just consider why else this may be another good location to buy. And if you have a level of resistance that's been touched, once, twice, thrice, then it's a really smart idea to consider, if you were a seller at that level and you had this broad, sorry, that's a really bad drawing, but you get the idea. This is your chart, and you can see that you've got this big old rangy price action like this. If you sold here, where would you take profit? Where would you potentially be looking to take profit? On the other side of the range, right over here. Now if you sold, you must buy to exit. So what's that creating? Demand down in here. Okay, so not only do you have big banks buying, but also you have an extra bit of confirmation that there's some buying occurring by virtue of the fact that people selling on the other side of that range are going to be exiting their positions for a profit, liquidating their sell position. So always the opposite. If you're a seller, you must buy to exit. If you're a buyer, you must sell to exit. So that's going to create demand as well. So again, net it's just adding to the fact that yes, you've got a manipulation, but also don't miss out the fact that there are other traders trading for other reasons, and they'll be exiting their positions, potentially making money, and that's a highly motivated position to find yourself in, right? It's a high motivation to take profit. There's also high motivation to exit losing positions or be stopped out. So these are all cumulative effects that can add weight to your overall trading decision, and ultimately the result that you are trying to achieve. So it's just an added bit of confirmation. I hope you found that helpful. So what you want to do is you want to look, once you've realized that you've had a stop hunt, you want to delve down into this price action and look for some type of failure to follow through, and then take the trade, go along. And if you'd like to join me in my inner circle to learn how to look at the market in this way in more detail, then click on the link below, share this video and hit the like button if you like it. Come and join me in my inner circle, and I'll see you on the inside. Take care.